Hey everyone, welcome to another video of Connecting Minds. In this episode, we will discuss about the tax benefits available for startups in India. Now, 65% of the country's population is below the age of 35, possibly making it the youngest population in the world. And if this population is skilled and handled quite carefully, it could turn out to be a huge strategic resource for the entire nation. Acknowledging this and realizing that startups in India have this good potential to generate employment, the government of India came up with the Startup India mission or the Startup India scheme in 2016. To bring out some facts, as per the economic survey of the year 2020-21, the last year, India currently houses the third largest ecosystem for startups, of which more than 100 firms or 100 enterprises have achieved the unicorn status by crossing the 1 billion USD mark. So definitely there's a need to give special attention to all these startups by all regulatory authorities, especially the income tax authorities. And therefore, the Income Tax Act holds some benefits for startups in India to make their life more smoother and give them some kind of an impetus to help them realize their true potential. Now let's divide the entire video into three parts. In the first part, it is very important for all of us to understand as to what qualifies to be a startup. So under the Act, the term startup has been defined, and this definition includes 5 conditions. Number 1, you are either a private limited company or a registered firm or a LLP. Number 2, you have not crossed 10 years of operation since its incorporation. Number 3, your aggregate turnover in any financial year has not crossed 100 crores since incorporation. Number 4, you are either involved in the design or development or innovation or improvement of any product or service which has a scalable business model to A, generate revenue, and B, create employment opportunities. And finally, your business has not been formed from any existing business as a result of hive-off, cut-off, division or split. So if all these 5 conditions are satisfied, you are eligible to be called a startup, and this eligibility helps you to register under the Startup India scheme. Now let's talk about the tax benefits available for startups in the country. The first one is tax holiday. Now what this section says is that if you are a startup running an eligible business, then you can avail 100% of tax exemption on the profits that you generate in any 3 consecutive years in a block of 10 years. In other words, if you are a startup and you have incorporated your business sometime between 1st April 2016, that's when the scheme came out, right up to 31st March 2023, the next March, then you could avail 100% of exemption from tax on the profits that you generate in any 3 consecutive years in a block of 10 years. So it is at your option to choose which are those 3 consecutive years in a block of 10 years in which you are making profits and thereby claim 100% of tax exemption on the same. Now the second one is exemption from angel tax. Now here what this section says is that if you are a company being a startup and you have issued shares to a resident angel investor from whom you have received consideration, and the consideration received exceeds the fair market value or the real value of shares being issued, the differential amount, that is between the actual value and the fair market value of the shares, would not be taxable in the hands of the startup company. In other words, that extra value of money received by the startup companies would completely be tax-free. This was probably brought in by the Indian government to support startups in their initial years so as to improve their fundings, their cash injections, to help them kickstart the business. And finally, if you are a startup, then you could probably tell your prospective investors that, hey, if you have just sold a residential house property and if the net consideration is invested in the equity shares of the startup, then the investor could avail 100% tax exemption on the long-term capital gain income earned from selling of the house property. In other words, 100% tax exemption is available to all individuals from selling of a residential house property if the net consideration is invested in the equity shares of a startup. Of course, there are conditions attached to this particular exemption for both the investor and for the startup. I hope I was able to make things clear through this particular video and explain the tax benefits available for startups in India in a simplified manner. So if you like the video, please do show your support to us by hitting the like button. If you want to become a member of this channel and receive notifications on a weekly basis in the form of videos, please do hit the subscribe button. And yes, also the bell icon on the side if you want to receive notifications on a real-time basis. So see you guys in the next video. Take care and have a great day.